G'day folks, welcome back to Pete's Investing. It's May 22, 2024. This is the platinum, copper, iron ore and crude oil update. And as you can see, iron ore and copper have risen slightly since our last update. Crude oil's moved sideways. Crude oil's declined slightly and platinum's moved sideways. On our heat map, you can see at the top left there, we've got mostly bullish on the platinum, US crude and high-grade copper. On the monthly, with the CCI trends, iron ore's neutral. On the weekly, predominantly bullish with the exception of crude oil, and on the daily, we've got a mixed bag there with neutral, short and long positions across the board, plus our other instruments we cover periodically on other videos as well. In terms of a trading idea, step one is determine the trend direction to trade. So if you're trading on the daily, we look at minimum weekly trends and we trade in the direction of the weekly. If you're trading on the intraday, like the 1 hour, 2 hour, etc., then we trade on the minimum of the daily as well. On step two, we look at the direction of the CCI 150, we look for a fresh breakout, and we look at this from the CCI moving averages. And step three, we close a trade when the CCI 150 enters the CCI 150 moving averages, as well as the price moving averages. So looking at platinum first off, we're bullish. The CCI is broken above the moving averages, and that's giving us a bullish signal. On the weekly, that's also bullish. It's been that way for a number of weeks now. And on the daily, it was bullish, although it's broken into a neutral positioning with the CCI breaking into the moving average band. So preferably avoid trading at the moment based on the daily trend. If we look at the daily chart as a reference, and if you're trading on the hourly, and you can interchange any of this with 15 minute or the 2 hours, or whatever time frame you're choosing. I'm using the hourly here as an example. So you can see here during this period when we had a bullish run, you would have gone long when the CCI broke above the moving averages else on the CCI, as well as the price breaking above moving averages on the price chart. So you can see there along this period here, you would have taken preferably around that point there when that broke above. You can see there during that period, you would have entered long there. Now the CCI went sideways, but you would have stayed in the trade and waited for the moving averages of the price chart to break to the downside, and that didn't happen until that point there, and that would have generated 75 points, and you would have avoided you would have had a little rise there, but again that would have closed you out with a 21 point loss, and you would have avoided going long during that period. Now in this point here as well, that would have been a break above the CCI as well as the price chart. Going back to this point from around 16th of April, so you can see there during that period there when it was going down. Let me bring up the short positioning. You would have gone short from that point there. Let me just zoom in. You can see they're going short when the CCI at that point there that's during that period there. When the price breaks below the moving averages and also the CCI breaks below the moving averages, you would have gone short and stayed in the trade until that point when it broke the moving averages, crossed over on the price chart. You would have generated 36 points. You would have been a little loss there, generated another 17 points, and so on. Now you'll notice here as well that would have been advised probably be careful about going short, because I was giving you a bullish divergence, higher lows on the CCI versus lower lows on the price, and eventually it did bounce up. If you zoom out, you can see there it bounced up quite substantially, well beyond the 100% level. Sometimes they go a lot higher than the minimum target range, and you can see there was another bearish divergence. Bearish divergence there, came down, hit our target area there. In this case, it came down, hit our target, and broke further to the upside. Next, we'll look at US crude. This is giving us a bullish signal on the monthly, although notice it's turning down. On the weekly, it's already broken down and giving us a bearish signal. And on the daily, it's actually broken through that moving average band. And it's giving us a bearish signal as well, so only bearish trades to be taken at the moment. If I jump to the daily and the hourly charts as further examples, again during that period you would have taken short positioning, and that would have been from that point down, short positionings only. So again going short at that point, which equates down to that point, you would have generated about 460 points up until the moving averages crossed over on the price. That would have been a small loss. So again you would have probably avoided going short during that period because the CCI was going long, and at that point, that would have generated, again, another negative result. Again, it's pretty much sideways. When you see a sideways movement, that was a bullish divergence. That's where you probably avoid taking trades in the direction of the the daily chart. Remember, in this case, we're only going short during this period, and you would have avoided going long during that period, and possibly even avoid going short because that was giving you a mixed signal. So again, primarily going short only when the CCI and the CCI and the price chart move in the same direction. In this case, they're moving in the opposite direction, giving you a divergence. Now at the moment, it's giving us a bullish signal on the daily. So again, showing you the bullish movements, going long during that period. You can see there they're moving in the same direction, and that would have generated 67 points. And at the moment, that's giving you a bearish signal, and avoid going long. This is iron ore. There's no CCI given on the monthly. On the weekly, we've got a bullish signal, the CCI breaking above the moving averages. And on the daily, we've also got a bullish signal, so only bullish or long trades to be taken. Jumping to the daily and the hourly charts, assuming you're trading the hourly time frame. Again, you can see there from that point onwards, which equates from this period, you would have taken long trades. That little run would have given you 96 points. Here you would have avoided potentially going long during that period because we've got a bearish divergence. So that would have given you minus 10 points actually going long, minus 16 and so on. Again, the CCI is declining, so you would have avoided going long during that period. Now here the price is moving in line with the CCI. So you can see there, had you gone long at that point, when both the CCI and the price broke above the moving averages, that would have been a nice little trade, and you're currently in the trade there. So if you went long there, you're still in a trade. Although notice it's starting to turn down, so that may close out soon. But again, we've got a bit of a way to go. But it depends where you want to take your profits. If you're happy with the result, you take your profits. Otherwise, you let it run, let the moving averages cross over. Lastly, we'll look at high-grade copper. And on the monthly, we're bullish. On the weekly, we're also bullish. And on the daily, it's breaking into a neutral positioning with the CCI breaking into moving average bands. So avoid trading this one at the moment if you're trading intraday. Jumping to the daily and the hourly charts. So you can see I had a nice little bull run going back to the start of February, and that corresponds with this period back here. Actually, no, let me go back a bit more. It actually starts back here in February, as I said. So pretty much back here. Now I've got the long positioning here on the indicator on these little patterns. You can see there where you've got the same, moving in the same direction of the CCI and the moving average on the price. But going back to that point there, which it corresponds back to about this point, I haven't gone back that far yet. That generated 338 points, dropped off, wait for until both the price and the CCI break to the upside, going long, 139 points, broke down, closed out your position, another long position, that generated 950, and so on. Here we've got a bearish divergence versus higher highs on the price. Now you still could have traded that if you followed the price alone, but again, making sure you're keeping a close tab on it. But again, it's a bit of a risky approach. Now that one here would have generated 218 points between that entry and that close. Then it started declining, both the price and the CCI. So avoid going long. You don't go short because remember, we only go short when the daily is showing a short positioning. Now where we are at the moment, but you get the idea anyway with the pricing. You get the idea at the moment we're showing a short positioning on the potentially short, and we'll wait for it to break below the moving average band, but potentially a short positioning soon on the daily. And if I go to the current positioning, let me bring up you can see there, that's starting, so that was a small, as you can see there, when the price goes pretty much sideways, you avoid taking positions if you can. Here it's broken to the downside, likewise the CCI, and now you'd be in the trade at the moment going short high-grade copper. So we'll see how that goes in the coming hours and days. To support us more, go to the Patreon page where we look at weekly scans of bullish shares. Thanks for watching. See you in the next video.